Hello and welcome to Policy Bazaar. I'm Arjun Bhagat. Now, if I were to ask you to identify your costliest asset, what would it be? Undoubtedly, it has to be your house, and yet not many of us acknowledge, let alone make any attempt to insure our house against potential threats. The year 2014 witnessed a number of natural disasters, including the Jammu and Kashmir floods and the Hudhud cyclone. Now, these disasters have created a certain amount of awareness amongst people to protect their hard-earned assets, including the house and its content against such calamities. Now, today we are going to be discussing about home insurance in detail and try to analyze why it is a must-have policy for us. Let's welcome Yashish Dahiya, CEO and co-founder of PolicyBazaar, and Milan Naik, country head, marketing and institutional sales, Liberty Videocon General Insurance, to the show. Thanks, Yashish. Thanks, Milan, for joining us on the show. Yashish, let me begin with you. Why is home insurance so important? It's not compulsory. Not a lot of people take it. Why do you think it should be a must-have in your insurance portfolio?
I think what is insurance about? Insurance is about those events which you cannot financially handle, which make one's life so miserable that one needs to take support from the insurance pool or from somebody who can insure it. And the house is by far and away the most expensive asset we have. Now, the point is, houses don't disappear every day because of floods, etc. So we, don't expect them to disappear that often. But at the same time, the cost of something like a home insurance is also quite low. And if one was to try to convince customers about why it's important, I would of course try to highlight the fact that floods happen and the house can go. But the simplest way is, a lot of us, I for example, when I go to sleep every night, I do wonder if all the doors are shut, because I'm worried about theft. And the simple thing is, even theft is covered in this. So if somebody just breaks into your house and steals stuff, that is also covered. And I think that should convince people to at least sleep with peace, that if something does happen to their, we just had a neighbor getting robbed 3-4 days ago, and we hear it all the time. So at least that's an event that happens more often. And I found that consumers are more convinced when events happen more often, rather than when dramatic events happen once in a while. I think Milan will have some more stats on this, but if one was to just look at the stats of how many homes have kind of melted down because of floods or because of events of that sort, I think that number is quite scary.
Right, Milan, what's your take on this? And also, what's your perspective as far as insurance of homes is concerned from an insurer point of view?
Sure. So, Arjun, let me put it in perspective again. I think if you see the overall macro picture, the penetration of home insurance in India is about 0.65%. So, this is based on a couple of sources that we've been able to identify.
And would it be correct to say that most of those are apartment buildings?
I would say we don't have necessary data on that, but 0.65 is the penetration on an overall basis, which is still negligible.
Right.
And as you rightly mentioned, in the context of a couple of calamities that recently hit our country. Now, you put this in the perspective, in the context of penetration globally. For example, in the UK, it's 97%. In the US, it's 96%. In Germany, it's about 80%. I think people clearly recognize in the Western world the need for being insured, especially for, as you rightly said, one of your largest assets. The recent floods that happened, for example, the Mumbai floods, that happened in mid-2000, close to about 380,000 houses got impacted by virtue of that one single event. Jammu Kashmir, almost close to 2.5 lakh. So you can imagine if one single event were to happen, and if there's a concentration of household, the real impact on the individual as well as on the family. And people put their life's earning into one single asset, and if you've not covered it, it's a bit strange to sort of kind of relate in terms of given some of these situations.
Right, Yashish, you talked about household goods. So define that for us. I mean, what all is insured, what isn't?
So see, when you basically take home insurance, there are two kinds of home insurance. The first one is the building. So the structure, if that gets damaged or the house gets wiped off, earthquake, floods, etc., any kind of natural calamity, could be even a fire, right? And then comes a second type of coverage, which essentially covers what is inside the house. So this could be...
So are these, just for clarification's sake, are these two different covers you have to take, or they're inbuilt into
They can be inbuilt in a single plan, or you can take one type of cover So you can take them individually, or you can take a single plan which covers both. Both options are available. Now, when you talk about contents are what's inside the house. It includes your furniture, it includes your clothes, it can include jewelry, it can include the electronic items, it includes your television, it includes your... Now, and all these things are not just covered from theft. They are also covered from things like very dramatic power outages, various sorts of potential damages are covered. Of course, they have to be restricted. So there's a simple rule. You can't have more than a certain amount of cash at home. You should not, like, yeah, I can imagine people having a lot of cash at home, but they should not be having it. Like, it's ideally supposed to be in the bank or in the locker. But whatever you're allowed to have at home, if that kind of cash disappears, or if some jewelry is there up to a certain amount, as long as you've kind of declared it, if that gets lost, then yes, or gets stolen, then yes, you would get covered for that. So I think that is what contents are. It is basically what is inside the house, and it can be everything. So it can be your computer, it can be your television, it can be your refrigerator, it can be your air conditioners, it can be, as I said, your furniture. It can even go on to being, expensive paintings, vases. It can be anything.
So a lot of people, Milan, would say that it sounds pretty complicated. I mean, I'll have to give list after list as far as household goods are concerned. So how do you actually go and assess the value of household goods? And also, what do you need building permissions? Do you need, what kind of documentation do you need when you go and insure a building or an apartment complex or an individual house?
Sure. So one is about, like Yashish mentioned, the structure, and other is the content. So on the content side, there are two ways to kind of take a policy. So one is over-the-counter OTC product, where you can, it's basically on a first loss basis. So for fire and other 13 allied perils like floods and explosion or of any kind that happens to the structure in a house. So you have a cover for that, basic cover. Then you have for furniture fixtures, you have for electronic items, you have for jewelry. And there are also sections for, say, for example, third-party liability. Right? So God forbid, like for example, when you have maidservants working in your house, and if there were to be an event and something were to happen to them, then there's a coverage offered to that for them as well. So it's quite an exhaustive cover for any possible event that could happen in the house. And so one is the OTC, where there are fixed sum insureds for each sections. The other is a declaration-led, which absolutely, I think, to me, I personally have gone into a product which is basically you have to take the effort. You have to ensure that every single asset of yours is declared to the insurance company and told to them. That gives you the
along with the bills or just approximate.
No, you need to, of course, give them.
Yeah.
You need to substantiate it. You need to give the model number. So there's a fair amount of detailed exercise behind it, but it's a one-time effort. And every time that you buy an additional asset, you just inform your insurance company so that there's an incremental premium for that. But what it gives you is, complete peace of mind.
Right. Right. So, what about some of the exclusions, Yashish?
So there are exclusions.
And explain to us act of God, because that seems to rankle a lot of people.
So there are exclusions in many policies around terrorist events. There are exclusions around misadventure of various sorts. So if you've had too much alcohol, you're under some influence, and you set fire to your own house, or you kind of there's some exclusions for those types of events. There are exclusions for continued absence from home. So usually there will be a 45-day, 90-day, 180-day kind of limits that you can have. For that period of time, you can be away from home, but you can't really buy it for a house where you're never there, or you're there once a year, etc. So you will have exclusions which are around constant travel, and you have to kind of check the house quite often. But those are the broad exclusions. Otherwise, bulk of it would be, there will be exclusions for cash over a certain limit. So there will be constraints around what you can cover. However, you can go for specific declarations as well. And once you go for specific declarations, then of course most things are covered. However, if you have home insurance, one of the primary things is to keep some record of the items in your house, and list them out and have the bills, etc. Specifically, if you have some extraordinary items, so which are not normal. So insurance companies will be genuine in terms of understanding that if this is the amount of space, then this is the amount of electronic goods that should ideally have been there. But if you have something more than that, then it's much better if you have your own, documentation.
Right, Milan, what about home loan insurance? I mean, would you recommend that? Are people taking it? Why is it important?
Right. So, I mean, again, 0.65% penetration, which is anyway negligible. A large part of that, to me, I think, is by virtue of what happens courtesy the banks. So, whenever they are extending a loan, a mortgage loan, or to customers, they also offer, along with that, is a home insurance, because they have an insured interest, because there's an asset that they are funding, and they want to ensure that the asset is safe. God forbid there were to be an event. So, there is clearly insurable interest over there, and they are the people who are actually driving that insurance penetration to a large extent. So to me, I think having a home insurance, there are a couple of elements that's important. One is, at a personal level, financially, you're taking a loan. So effectively, you require some sort of financial instrument that protects you for that loan.
Precisely.
The other element is the asset that you're creating. Now, how do you protect that asset? Whether it is under construction or once you sort of occupy it, right? So I think you need both those elements, especially when you are taking a financial liability.
Right. So what we're going to do is we're going to take a short break, Yashish, Milan, and then we're going to come back. We're going to ask a few questions about this important subject, and then we're going to take your questions as well. But you can tweet us at Twitter at PolicyBazaar_in. You can email us at queries@policybazaar.com, and we'll see you shortly after this break. Keep watching Policy Bazaar.